Hi, welcome again to another edition of Market Analysis for today, December 3rd of 2024. I'm Giovanni Betancourt with Vantage Markets, and this is a recording previously about an hour previous to the US Asian Open. All right, so let's take a look at what the market's fluctuation could probably be for today. We saw that yesterday the markets, after creating that ascending triangle in the daily candlestick chart, we fluctuated, we broken out of that range to the upside. We still haven't reached that all-time high made back on November 11th. Of that high in the CFD market was or is 21,338. So therefore, our first level of resistance is going to be right around there, and the second one, just we don't have any other previous, so it's just going to be 21,500 ish. Now, as far as for support goes, we'll use that 20-day moving average within the Bollinger Bands to be used. And the second one, we can use 21,100 just because it's a level where obviously we just want to select it. There's no main reason behind that. We can select 21,000 so we can give that psychological value of it, round number of it. But again, which is really not round, because round will have to be 0, 2, 4, 6, 8. But at least it's a psychological price level, 21,000. 21,100 is just closer to having at least touching the most candles in the past, which is 1, 2, 3, 4. Didn't quite hit this doji, and 5. So previously, that you could use that as a reason if you want to have one. So the market, where can the market extend to? Obviously, we want to be able to see if it's going to revisit that high and break above it. And let's just use our extension tool. So let's use the breakout move to the high and to the low of today. And we could set the levels using our Fibonacci values, right? Or not. In this case, the all-time high is right below the will be 0.38% of the Fibonacci extension. And then the golden ratio is right below where it passes. So in this case, we can use that as our probable level of second level of support, of probable level to come for the market to come to. Now, it could be, it could not be so that way we can just use it. Now, we can also come in and use yesterday's fluctuation, to find the typical price, which is by adding the high 21,257, the low 20,938, plus the close 21,208 equals divided by 3. That gives you 21,134. So, which is basically right above, somewhere around here, right? In that case, if we want to use this as our first level of support, we can use that. So if you want to have a stronger reason, and that's a pretty strong reason because it's the typical price, then just type it in, 21,134. I mean, yeah, you can also obviously add all of the numbers, but I'm just using, I'm not using the decimals. So there we have it. We have the 20-day moving average as our second level of support, and then we have the typical price to be used as our first level of support. And then we have our extension or resistance levels for it, and you can do this with all of the assets. So you can just come in and find those levels to trade off of. Now, the momentum, we are in December, last month of the year, and the Santa Claus rally is in full effect. So I speculate that the market will continue to trade higher, at least sometimes, most of the times, as the market fluctuates to the upside and hitting that high, revisiting the high, you'll find that resistance, which means they're sellers on that point. So as sellers participate, trying to sustain price movement even higher, then obviously buyers will come in and try to dominate that and continue to move the market to the upside. And the reason that you want to stay long by buying the assets, the indices, is because in the United States, Americans get a tax break for whatever trades they've done by the end of the year. So they usually bombard the market, and if they have any losses, they can write those off and for the tax purposes next year. So that's really why a lot of people. That's why most of the Santa Claus rally effect comes into place. So stay long. I mean, also the market is giving us that. A lot of people, you might start hearing that the U.S. is in a asset bubble, and obviously because we are in a new terrain, making all-time highs. Dow, S&P yesterday doing that. So again, it's just taking it with a grain of salt. Staying long the assets is, the indices will be your best speculation to come. Now, obviously, this is my point of view. I could be wrong, but you can see that the market is moving higher. The S&P making a new time high yesterday, so that new time high has been made. Again, I'm just gonna leave this level of again here. If you wanna again just make that assumption or make that analysis by using the extension tool, the Fibonacci extension tool, trend-based Fib extension, and just use those levels, 38.20% and 61% the golden ratio as the probable levels of resistance. So let's use that. And there you have it. And support, you could use just the all-time high as a probable level of support, and then yesterday's low, or you can also use the tool of retracement, the retracement tool. So from this high to this day, from this high to this low, and use those levels. So basically you see how let me see if I can expand this a bit more so you can see it better. So you see how the 61, the golden ratio, is just right below that all-time high. But you could use that as your first level of support, and then the second one can be it could be, oh, what a coincidence, no? Yesterday's low. And there you have, oh shoot, I deleted the line. All right, so right around here. Okay, boom. All right, and see, use those. So staying longer. All right. So as far for the Dow, also, even though continue to make all-time highs on a daily basis, it has retraced. Obviously, it was time for a nice retracement, profit taken. Will we make another attempt? Well, easily we can obviously come in and take a look at that double top, which is all-time highs. So, but still long. Then we have crude oil. Oh, nice move to the upside, but yet we haven't really not even violated our level of resistance in this so far this week trading session. So the levels are going to stay the same, but still looking to be long. Nat Gas. So we have Nat Gas right here, and it's fluctuating to the downside. So let's just use yesterday's high, and let's just use this level and support. Let's see the same ones. Now, this could be just profit taken or repositioning, but demand obviously is gonna be there. Then we have here gold. So gold is in a trading range, the same levels that we have been using. The moving averages are just continuing to intertwine. So a breakout is essential. So let's see how much of a breakout will we have. And everything continues to just be bullish for gold. So I don't see any reason for gold to decline or to retreat so far, because we don't know what would be Trump's policy or regarding all of these geopolitical uncertainties, regarding Hamas and whatnot, the conflict in the Middle East. So we'll know that next year. So far, perhaps for the rest of the year, we'll probably see gold just sideways trading, choppiness somehow, but still standing itself above 2,500 at least. Then we have silver. Silver is just on a continuous tear to the upside. Let's use this level. So we have fluctuated above that level of resistance. So let's use the 50-day moving average as a probable next level of resistance. The 20-day moving average within the Bollinger's Band can be used now as a dynamic support. So if the market does continue to fluctuate towards it, we could speculate a reversal trade could be taken. So reverse to the upside basically because it's going down. It rebounds off the 20-day moving average and then moves higher. So that's technically speaking. Then we have copper. Copper has finally broken out of that trading range, and even though yesterday it did a fake out to the downside, it recuperated with a doji, so it balanced itself out. And today we see that breakout to the upside. We just fluctuated really short above that moving average, that resistance level. So let's use a midpoint between the second and where we are right now. So still looking to move higher. Bitcoin, as it fluctuates to the downside, let's see if today will be a level where Bitcoin will find that support and then just move higher. We are entering neutral zone, and the other side we're still overbought, so perhaps it will continue to sell off. But 94,000 is a psychological round number, so let's see if that will be the case, where rebound from here, or will it come in and revisit this this dollar bottom where we have our second level of support. The euro, after just tanking, then it kind of is looking to sustain itself above 105, which is what it's doing straight up so far today. Well, dollar index will have a lot to say about that also. So being out of the currencies right now, then the pound also looking to sustain itself above 126, and the dollar index is looking mighty bearish. But you see, it has done that reversal of that 20-day moving average. I mean, rebounded. It was trading lower. It opened with a higher, with a gap up. It was been close. So now will it continue to fluctuate to the upside? So now, since yesterday we did validated that, and today also, let's just use this previous high and yesterday as our level of resistance for the dollar index, and this low for it. So that's it for today. Have a great trading day, and I'll see you tomorrow.